FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 10/17/19. Well, all sorts of incredible things going on. Stock market is getting close to a new all-time high. Is there really a deal with Trump and the Chinese? Opinions certainly tend to differ. And, well, we'll talk about other things as well, time permitting. But in the meantime, followthemoney.com. That's Jerry Robinson, good friend of the show, who's with us now. Jerry, welcome back. So, hey, stock market looks like it's going to hit an all-time high yet again. Isn't that a great sign for Trump that everything is working according to plan?
Well, maybe. I mean, again, I think and by the way, it's great to be here. Thank you, Kerry. I really do appreciate it. You know, the point you make there, is it good for Trump? Yeah, sure. I mean, that's really what Trump is hanging his hat on right now is the stock market. Although the stock market is, we've had some kind of gyrations the last several months, a lot of it due to the China-U.S. trade wars that have been going on. And right now I'm looking at a chart of the S&P 500, which is really the main market for global investors. When they look at the United States stock market, you can look at the Dow, you can look at the NASDAQ, but the S&P really is the one that most global investors are looking at to kind of gauge and measure the United States stock market. And I'm sure it's what the Fed looks at too, whenever they're making policy, because ultimately it's that IRA statement that you get, in the mail every month, or your 401k statement, and when you open that up, and if that thing is at least static or going up, then hey, Trump sounds great. And the Fed must be doing their job and everything must be working out just fine. And so right now the market has been kind of in a sideways grind. We're just below 3,025 on the S&P 500. We break out above that level, 3025, then we have a brand new all-time high. Of course, that will kind of be a self-perpetuating cycle, perhaps, where you'll have the media, pumping the fact that we have a brand new all-time high. President Trump will also take advantage of that moment to promote that idea. And then, of course, you'll probably create some FOMO where people say, hey, I better get in the market. So it's, I do think it's good for Trump. I mean, President Trump really needs the stock market to keep moving higher, and he needs to stave off any kind of recession. And, if he doesn't, I think that's really the only thing that can imperil him here. I mean, I don't think any phone calls he's made, any kind of impeachment inquiry, like President Trump said, he could shoot somebody, right in the face in the middle of Fifth Avenue in downtown New York City. And I think his adoring fans would cheer him on. I don't think there's anything that can really stop people from voting for him until they open up their 401k or IRA statement and they see it cut in half like they did in 2000. Now that would be deadly to Mr. Trump. But aside from that, I can't really imagine that he's in any kind of turmoil here for the 2020 election. Yeah.
And I tend to agree with you. So, looking at the Fed, so I've talked about this with very many guests. It's not a very transparent market. It's a very opaque market. I'm talking about the repo market and the beginnings of QE4. What is your take? What's going on there?
Yeah, that is really something, isn't it? We just reported we do a Robinson report every single weekend for our members. And in the Robinson report, our headline was Fed launches new money printing scheme, $60 billion per month through at least, by the way, the quote from the Fed press release is at least into the second quarter of 2020. So now we're talking, you know what that means. I mean, that's Fed speak. I mean, that means they're going to be going beyond that. We're talking $60 billion in U.S. Treasury bills each month they're going to be buying. That actually began this week. And the Fed has been very, very sensitive about this announcement. They've really tried to manhandle it and make sure that the press is not promoting it as quantitative easing, because that would be perceived as a failure on the part of the Fed. They even tried to reassure investors by explaining that this, quote unquote, does not represent a change in its monetary stance. and they've urged the financial media not to refer to it as QE. But the adults in the room know what's going on. The Fed is slowly losing control of U.S. interest rates. As you pointed out in the repo market, we've been seeing hiccups there continue. We haven't seen that since 2007 in the way that we're seeing it right now. And so they're trying to keep ahead of the curve. To their credit, that's probably smart. I mean, they probably do need to get ahead of whatever's coming. But, again, let's just think about what this means. I mean, $60 billion, Kerry, being pumped into the Treasury market each and every month by the Fed now. They're printing money to do this, of course. And then that comes on top of the $75 billion up to $75 billion per day that they're pumping into the repo market, the repurchase agreement market. And, again, I mean, I think when you look at that, I mean, you just literally you realize that we are on borrowed time here. I mean, think about the reality. We are running $1 trillion deficit this year. So in other words, to maintain the greatest economy ever, it only costs $1 trillion per year. So because we can borrow $1 trillion from Lord knows who, we're able to prop up this economy. You take away that $1 trillion in borrowing every year, we would be in a really bad place. So we have this great economy, so-called great economy, and yet who is talking about the $1 trillion we're borrowing each and every year just to prop it up? And on top of that $1 trillion deficit that we're running, we have a massive trade deficit. Twin deficits are out of control. And then you have the Fed now stepping in the middle of this greatest economy ever to start new QE, right? $60 billion a month on top of the $75 billion, up to $75 billion per day for the repo market. So this has all the hallmarks of an economy that's on the precipice. And I think most people know it. There was a story in Market Watch just a few days ago that said that the average American household, in fact, about 2/3 of American households, if I remember the statistic properly, I know it was more than half, are preparing for a recession, even though, the media and the economic talking heads seem to be saying everything is just fine, and the Fed keeps telling us that everything's just fine. So people kind of, they know something's up. They can kind of tell the average person. We shouldn't expect the media to call the crash. We know that they didn't get the first one right. They totally blew it in 2008, and they'll miss the second one too, just like the Fed will.
Mm-hmm. No doubt. I totally agree with you there. The Fed, they very well might have been calling it, but they're not going to admit it. They very well might have seen it coming, but they didn't think it was going to be as catastrophic as it was, where it became a near existential event for the world economic system. Do you think they're a little bit better prepared this time, but maybe there's less they can actually do about it?
Perhaps. That's probably a good way to put it. They're probably more prepared for it because it's fresh in their memory. However, the ability to stave off some sort of problem, we'll see. I mean, there's a lot of debate about that. Many people have said that the Fed, is out of bullets. I don't know about that. I'm not convinced that the faith in the monetary authorities has been as destroyed as it has been in the political authorities. If it was up to the politicians to save us, then I think the faith would not be there. But there's still kind of a mystical vibe around the Fed, and people still kind of give the Fed some sort of credit, even though they really don't deserve it. And so I have a feeling that they might still have some bullets in their gun, but I'm of the persuasion that is eventually going to run out. I'm not saying that they can stave it off forever, of course. I mean, I wrote a book called Bankruptcy of Our Nation, so I believe that we're bankrupt literally. Mm-hmm. And as we just said, only takes $1 trillion a year in borrowing to run this great economy. So obviously we're on the precipice, but I would just say that, yeah, maybe the Fed can keep propping up the market for a little longer. The markets can always remain, more irrational than you can remain solvent. And so that's the idea. And I think also the other big clincher here, and you had kind of alluded to it, was the U.S.-China trade war that's ongoing. We got this really weird trade truce last week. And by the way, that trade truce between the United States and China came on last week on Friday. Mm-hmm. And I was in a hotel room, and I happened to be in a hotel that day, and I was watching the events play out on TV. And it came within maybe 90 minutes of the Fed giving clarification about their new QE program. So it was very coordinated that the Fed was making this announcement within minutes of the United States and China announcing some sort of trade truce. But you know what was so strange about it? As I was watching this on TV, I saw, and others who watched this saw the same thing. This announcement occurred in the Oval Office at the White House.
Mm-hmm.
And President Trump was touting it as I don't have the exact quote, but you know how he talks. It was like the greatest deal for farmers that has ever occurred in the history of the world, or something like that. And what was strange though was that there was no Chinese president there. This was, in fact, President Xi was over hanging out with Narendra Modi, the leader of India, and they were brokering new deals. While the United States president in the Oval Office was meeting with his inferiors, trying to get some sort of, photo op, trying to patch together something saying, hey, we just made this historic trade deal. But it was only a phase one. And now, literally, the beginning of the next week on Monday, China began pulling back and saying, we're not sure. We need more talks before we sign anything. And now we don't even know if they're going to buy the additional agricultural products from the United States to the tune that they were going to buy. Now, China doesn't have a choice. It has to buy
them.
U.S.
They didn't do that out of the goodness of their hearts here, Jerry. You know that. They have.
They literally have
to. They don't have a choice. So this is like just acknowledging, and it's a way for them to save a little face here too, because they were going to, no, we're not. They specifically targeted a Trump political stronghold, the Midwest, the farm Midwest, the industrial Midwest. We're going to show them a thing or two. And that failed. So now, because they can't not buy our soybeans, there's no other place to get them. And they've got the pig apocalypse, the hog apocalypse going on in Asia. And it's not just them. It's every country in Asia. North Korea evidently has been hiding it. So you got so many things. So loss of face for the Chinese. They don't like it. That is the worst thing that can happen to a leader in China, right?
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Well, perhaps. I mean, I don't know if the U.S. farmers here, would say that China lost. I mean, I think in reality, I think that they really walked away the winners here. They didn't have to do anything about hardly anything in this quote unquote trade deal. Mm-hmm. I mean, this was a partial trade deal that didn't address a lot of the grievous concerns that U.S. businesses have been complaining about for years about China. And it was none of that was dealt with. Literally, it was only for the farmers. And China is now kind of backtracking on that. I mean, so, I don't know. I mean, to me, this may be getting ready to get even worse because we might see President Trump go ahead and lift tariffs on China. And, there's some debate about that. If that happens, you probably could see the stock market really get jittery. That's the only thing I think, in fact, that's driving this market. Mm-hmm. It's not the impeachment. I don't think the investors give a rip about the impeachment. You don't see anything there. You don't see investors worried about hardly anything else except this U.S.-China trade deal. And there's been some debate about maybe President Trump is kind of dragging his feet on this to get the announcement closer to the election time. That way he can have that to say, look, and then that might help with his election. But, from longtime observers of China like myself, I have the feeling here that it might be the exact opposite. Beijing might be holding out, waiting for Trump to leave, and then they'll broker a deal. So
yeah, that's just not, I think
we'll just see.
Acknowledgement, if there is a deal there, and we don't know that yet, but if there actually is a deal, it occurred because the Chinese realize that Trump is almost certain to win, and that it's going to be worse trying to negotiate a deal afterwards. But
that's so true. And here's the other thing I think that's really important. You know, one of the things we teach our members here, we've been teaching them for a long time, is the fact that China is on the ascent, and that's obviously not a secret. But many people don't fully understand what that means. I mean, China, as I probably stated on this program before, is already the world's largest economy, according to the World Bank, according to the IMF, according to many U.S. institutions, on a GDP PPP basis. And so that's already a foregone conclusion. The United States is already number 2. But the problem that often occurs is that, and you really begin to see this recently with like the NBA issue that's happened and the recent Hong Kong issue and stuff, is that many people, and this is the psychological pain that I talked about in my book, Bankruptcy of Our Nation. Many people can't stand it. They can't stand the fact that a non-democracy like China has trumped them, has literally, pardon the pun, but it has trumped them. That they have become larger than the United States. They have become more effective. They're leading in artificial intelligence. They're leading in 5G. They're leading in drone technology. They're leading in so many different technologies. And I think this is painful to the U.S. Patriot, you know, here in the United States. They don't know how to price it. They don't know how to process it. And so what oftentimes I've often heard is people will say, well, Jerry, you're just a commie because you think that China is better. No, I'm not a commie lover just because I see the facts. I just see the facts that China is rising and there's nothing that's going to stop it. There's nothing that the United States can do short of war. And they might actually go to war with them. That's what we've done before to prevent our competitors from rising.
Well, nobody's going to stop China, probably in all likelihood, except for China. You know, you have to say that.
True.
Countries have self-destructed before. Arguably, the United States has self-destructed. And, you know, that's really what it comes down to is, you know, they'll do themselves in. That's the way most the U.S. did. You know, it wasn't really foreign opposition that has put us where we are today. It was really internal treason, if you will, betrayal from our leaders within, right?
Yeah, self-inflicted demise, certainly here in the United States. And in China, many people will say, well, there's tremendous amount of debt expansion there, and it's enormous. And these same people oftentimes don't see that the United States is the greatest debtor nation in the world. I mean, oftentimes they just look right past that and they say, well, China has to blow up because it has debt. Well, using that same logic, we should expect a U.S. blow up even quicker. Yeah. I mean, China is the world's largest creditor nation in the whole world. I mean, when you're the largest creditor, the borrower is a slave to the lender. I mean, so China is very well positioned going forward, despite its debt loads, because it is the world's greatest creditor. The United States is very poorly positioned because it's the world's greatest debtor nation. And as you pointed out, it's already kind of shot itself in the head.
Yep. So we'll see. I'm not good at predicting the future. I have to tell you, a few short years ago, I didn't really see the rise of the electric vehicle coming. Not that I think it's that the roads are paved with gold for the electric vehicle, but I just see it as kind of like it's become a mass product, you know, and I just see it's going to prevail at some point. But
it's certainly more popular in other places. In the United States, we've been pretty indoctrinated through propaganda that oil and gas is the savior of mankind. But in other parts of the world, you know, they're quickly understanding, hey, wow, we can have cheaper energy without using oil and gas. We can actually have cheaper energy with solar and with other
they keep
types
saying
of.
That, but it's not practical on a wide scale. But that might very well be the trend for the next 30 or 40 years. The grid is not set up for solar, but be that as it may, you know, progress is being made, but cost alone is not the issue here. It's reliability. And That's going to require these giga batteries or tera batteries. And the cost of them at this point is prohibitive. That's not to say it won't go down in 10 years, but solar and wind, they have their own issues. They're not taking over anytime soon. Certainly not for 10 years and probably not for at least 20, but trends are trends. So
right. Well, and I think it's also important to point out that, as you point out, the reliability of them, that's where investment comes in, R&D. And I think here in the United States, we've been very slow on that. But in other countries like Germany and in many other countries as well, they've been heavily pouring into research and development in these areas because they do see the promise. Mm-hmm. And so if the United States would get its act together and stop, subsidizing oil and gas, then, and actually starting to think about, alternative energy sources, then we could also get ahead. But it's not, like you said, it's not in their best interest.
No, but it will happen because it's going to happen. Look, if I don't remember what percentage of oil consumption goes for transportation fuels, but if there could be 20, 30 million, maybe 100 million EVs, it's not going to happen in the next 10 years, but in 20, then the main consumption of transportation fuels goes down, and then the dynamics change. But then you got grid issues. In Texas, not so bad. In Florida, not so bad because they've actually been building capacity, and production of electric is going up because the economies have been growing. They have to plan ahead. In places like New York and California, they've been taking capacity offline, taking kilowatts offline, and they are not in a position to have a major EV fleet without a major reconstruction of the grid and of the power plants. Solar is not you can't have 8 solar cells on your roof and produce all the electric you need. It's just not going to happen because you can't store it, and therefore at night you have no solar. So then you're back to batteries. We just don't have batteries now that will do this,
Mm-hmm. Yeah, that's true. Well, and
it's all going to happen.
It's not just in this area, that we're seeing the United States fall behind, but also in digital currency. And in fact, I just got an invite to the Traders Expo out in Las Vegas, out in your neck of the wood. No, you're in Florida.
Yes.
But out in Las Vegas, I'll be out there November 7th through the 9th at the Traders Expo. And if anybody wants to find that, they can just go to followthemoney.com/Las Vegas. Mm-hmm. And they can learn more about that. It's a completely free conference, but I'm going to be speaking on why Washington fears blockchain. And we've been seeing a lot of this going on. What many people don't know is that while the U.S. here is kind of dragging its heels on blockchain technology, really putting the brakes on it in so many different ways, China which has been banning Bitcoin for a long time unsuccessfully, is unleashing its own version of a crypto. Well, it's not really a crypto. It's a national digital currency is probably the best way to put it. And it's going to be basically the digital version of the yuan. And this is a big coup for China, but they're going to be they were the very first central bank in 2014 to begin investigating the plausibility of a digital currency. And it appears they're going to be the very first major economy to actually release a digital version of their own currency. And what's so big about this is that you and I here in America, we don't think about transacting in the yuan. We can buy it through ETFs, but we don't, or we can run down to the bank and buy some if we want to. But the thing is that we just don't think about transacting in it. Therefore, we don't really create any demand for the yuan.
Right.
But when the digital version of the yuan is available, then it's going to be available mainly through many of these messaging apps. WePay, or I forget the name of I think it's WePay, Alipay, and many of these different kinds of messaging apps that are in China. And there's going to probably be a pretty big influx of demand for the yuan that doesn't presently exist. And so China's kind of beat us to the punch on digital currency as well. We'll see how that turns out. Who knows how that's going to turn out, but it does seem like a more efficient type of money. Digital currency that it offers is probably on the horizon, and China again is leading the way there.
I will be a little skeptical on that because you're talking about a new energy system, talking about new propulsion systems, talking about new financial systems, and there's no smooth transition for this stuff. When we went from carriages, horses to cars in the early 20th century, there was a lot of disruptions. We like to think that, oh no, it just happened. It was easy. And, but it really wasn't. There's a lot of disruption that takes place and a lot of work that has to be done. And, we just haven't seen the likes of this in our lifetimes. And that's, so I'm not disagreeing that it's going to happen, but I'm just not necessarily seeing it happening on this timetable. I think there's an inevitability to it because of efficiencies, but I believe that that the acceptance and the way to do this, I want to see it progress. I'm not saying no. Don't get me wrong. I never say no to new ideas. I think that's a bad thing. But what I am saying is, let's see the time here involved. Let's see how long this all takes. That's what I'm curious about more than anything.
China has a timetable right now, sometime within, and again, it's just simply a timetable, but sometime between the next 3 and 15 months, probably by the end of 2020, possibly before the end of 2019, but I think that's highly unlikely. That's a real ambitious goal that they have. But they said sometime within the next 3 to 15 months, they would plan on releasing this digital version of the yuan. It'll be a coup. It'll also be a coup against the U.S. dollar. This is a real nice, subtle way to drive more demand for their own currency, which ultimately that's really how the whole thing works, is that you have to have, it's just like anything else. I mean, dollars and yuans and all of this, they're just like hot dogs or pizzas. I mean, if you have a pizza stand and you want to sell lots of pizzas and you want to have a demand for that pizza so you can make more pizzas. And if you can make more pizzas, then you can hire more people and then you can sell. Well, it's the same thing with the dollar. You've got to find a bunch of people around the world who have a reason to demand the dollar. And so we did that through oil. That's why President Trump is complaining about endless wars while he sends thousands of U.S. troops to go fight for Saudi oil in the Middle East. And so that's all about the U.S. dollar in the end, because the Saudis prop up the dollar. And as long as they do, then 60 Minutes is going to continue to give them a pass, and the mainstream press is going to continue to give them a pass. But the minute, literally, Kerry, the literal minute that the Saudis turn and they start using other currencies, the Khashoggi thing is going to be back in the press, and the demonization of Saudi Arabia is going to go to full throttle here in the United States. The only thing that holds this relationship between the United States and Saudi Arabia together is greed. There's nothing else that we have in common.
Right.
So
that's generally a good bond until it doesn't work anymore. Anyway, Jerry, we're kind of at the end here. So just tell us about your service, how we sign up for it.
You bet. Yeah. People can go to followthemoney.com. We talk about a lot of things, as you can tell from this broadcast, but we really focus in on the markets and ways to make income. The average person out there has one income stream. The average family has three. Usually, the two individuals are working, the two spouses are working, and then they usually have some sort of small income stream that throws off from a bank or CD or something like that. We teach people how to get creative when it comes to income streams. We teach 22 different income streams that you can create both now and in retirement. We have an income university for our members. We have a trading software for our members. We teach them how to trade stocks, ETFs, options. We teach them how to understand cryptocurrencies. We do a lot, and we have a great amount of service here. People can find out about us at followthemoney.com. And we also have a lot of free services like our free podcast. We have a free newsletter people can sign up for. If they go to followthemoney.com and just go right to the front page and type in their name and email address, we'll send them some free videos, some free PDFs, and then they'll start getting our free newsletter every single weekend. So that's probably the best way to get started. Followthemoney.com.
Excellent. And Jerry's perspective is very instructive. We love reading your stuff. And we've known each other a long time already, so you'll be well served by subscribing to Jerry's service. Anyway, Jerry, we got to run. So, hey, followthemoney.com. That's where you find Jerry. We're at financialsurvivalnetwork.com. Sign up for our newsletter there, free. And hey, let's do this again soon, Jerry. We'll talk to you. You be well.
Bless you, Kerry. Good to talk to you, man.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.